to all of you. Hope you all are safe and at home. I pray for everyone in this current situation that everyone is healthy and is safe at home. We all know that our current government has a special focus on micro, small, and medium enterprise. Say they have come out with various schemes, incentives, plans for special focus on MSME. And recently, I think couple of months back, another program or another incentive which is introduced for MSME is pre-packed insolvency process, which is focused only on MSMEs. I believe the intention behind this introduction of ordinance, or I will say pre-packed policy, is to provide an efficient alternative for corporate persons like MSME in terms of resolution process, which should not disturb their current ongoing business or should not lead to loss of employment. So I believe with the current topic, which is pre-packaged insolvency process, we are all here to gather new knowledge, new area where CA can think about practice. And it is our pleasure that we are being, you can say, graced with CA Durgesh Ji Kabra, who is our Central Council member and also an insolvency professional. So now, with these words, I will request our current chairman, CA Sanjay Bhujbal ji, to introduce our Central Council member, CA Durgesh Ji Kabra, and request him to say a few words to our members.
Thank you, Harshal. Dignitaries on the screen, I welcome all the dignitaries, CA Durgesh Kabra ji, CCM, today's speaker, CA Anil Goel ji, our Vice Chairman, Vikasa Chairman, CA Abhishek Shah, our Past Chairman, Jayant Tandel, our Secretary, CA Harshal Ajmera, and our committee member and mentor, CA Rajendra Phadke ji. Friends, in this current situation where the pandemic is going on and the second wave is there, it seems that second wave is a bit of deadly and dangerous. We all are stuck to our home, but we have not stopped our learning. We are continuing to have our learnings through webinars because we are not able to have a physical meeting. And every week we are organizing such a type of webinar in a different topics. Today also we had a great seminar on IBC, wherein the speaker is Anil Goel sir, and we also has a CCM, CA Durgesh Kabra ji, who is also insolvency practitioner, as well as he is chairman of committee of Insolvency and Bankruptcy Code, ICAI. Before I say Durgesh Kabra to have some words, I would like to give an introduction of him. Durgesh Kabra is currently the chairman of Committee of Insolvency and Bankruptcy Code. He is a convener, Center for Audit Quality. He is also a member of Quality Review Board. He is also Vice Chairman, Committee for Membership in Industry and Business, ICAI. He is having more than 30 years experience in company law, corporate structuring, management advisory, audit and assurance services. He was the chairman of the WRC in the year 2013-14, in which WRC received various awards, including Best Regional Council Award and Best Students Association Award. He is an avid speaker and an expert on law and bankruptcy code. He has also conducted more than 150 seminars on various forums, conferences on company law, LLP and IB code. With these brief introductions, I request CA Durgesh ji to say a few words on this occasion.
Thank you, Chairman, CA Sanjay Bhujbal of NAVI Mumbai branch. The speaker for today, CA Anil Goel ji, who is also insolvency professional. CA Abhishek Shah, the Vice Chairman of the NAVI Mumbai branch. CA Harshal, Secretary of NAVI Mumbai branch. CA Jayant Tandel, the Past Chairman of the NAVI Mumbai branch, and all other participants It's indeed a pleasure for me to be a part of this program, which is being organized by Navi Mumbai branch on a very recent topic and an amendment to the Insolvency and Bankruptcy Code. It has been amended very recently in the month of April 21. And friends, the pre-packaged scheme for the MSME is very important as of now today, and more particularly in the time of pandemic when the MSME sector is facing a lot of stress. And as I feel that by using the prepackaged insolvency process or resolution process, the MSMEs can save themselves and they can continue to be the part of the Indian economy and can cater to the growth of Indian economy. Friends, a subcommittee of Insolvency Law Committee was constituted on 24th of June 2020 to propose a detailed scheme on implementation of pre-pack and pre-arranged insolvency resolution process by the Government of India, Ministry of Corporate Affairs. Subcommittee of ILC delineated three principles that should give the design of pre-pack framework, which are: the basic structure of code should be retained. There should not be any change which has already into existence, that is known as IBC, Insolvency and Bankruptcy Code. There should be no compromise of rights to any party. Right? One party gets benefited and another party doesn't. So that kind of compromise should not be there. And the third is the framework should have adequate checks and balances to prevent the abuse of the law. These three were the main thing on the basis of which this committee has come out with the report and was placed in the parliament and with the IBBI, and that has been approved. I'll come to that also. But how this pre-pack evaluation has taken shape and how this got evolved. So pre-pack has evolved over the time, not very recently, but over the time, differently in different jurisdictions, and every jurisdiction has a unique variant of pre-pack which allows the stakeholders to modify it further to an extent to suit their needs. It has different nomenclature such as pre-packaged insolvency resolution, pre-arranged insolvency resolution, pre-plan sale in the US, pre-pack sale in the UK, scheme of arrangement in Singapore, etc. A nomenclature suggests pre-pack is a restructuring plan which is agreed to be by debtor and its creditor prior to the insolvency filing, and then sanctioned by the court on an expedited basis. In the UK context, if we look the pre-pack, it generally refers to a pre-agreed business sale by an insolvency practitioner which doesn't require prior court or creditor's sanction. Friends, on the basis of these evaluation, the thought process has been developed in the country also, and this committee, which is known as ILC committee, that has proposed this to the government, and Insolvency and Bankruptcy Code Amendment Ordinance 2021 was promulgated on 4th of April 2021 for introduction of pre-pack in the country. And this has basically to save and support the micro and small medium enterprises known as MSME. So micro and small medium enterprises, as we all know, that are critical for the Indian economy as they contribute significantly to its gross domestic product and provide employment to the seizable population. Purpose to introduce a pre-packaged insolvency resolution process for corporate person classified as micro, small, and medium enterprises is as follows as per the pre-pack scheme and as per the ordinance to mitigate the distress caused by the COVID-19 pandemic, which has impacted the business operations of MSME and exposed many of them to financial distress, as I told you earlier, and to provide an efficient alternative insolvency resolution plan for corporate person classified as micro, small, and medium enterprises under the Insolvency and Bankruptcy Code of India, and that is which has been promulgated in 2016, ensuring a quicker, cost-effective, and value maximizing suggestions and outcomes for all the stakeholders in a manner which is least disruptive to the community of their business and which preserves the job too. So this is how this particular prepackaged ordinance has come into the force, and I'm sure that when this ordinance has come into the force, this is going to give an opportunity, a big opportunity to our professional brother. Friends, as far as I know, the Insolvency and Bankruptcy Code, which have come into the force since 2016 onwards, it has opened a lot of opportunities for the Chartered Accountants fraternity. First, to become the IP by passing the limited insolvency exam. And when we pass the limited insolvency exam, we become the insolvency professional. And when we become insolvency professionals, two opportunities immediately for us is either to be get appointed as IRP or as RP, interim resolution professional or resolution professional. These are the two as far as the IBC is concerned. But beside these, there are many other supporting services which can be offered to the IP and IRP and IPE, insolvency professional entity. And what are those services? You can act as a claim consultant. You can act as a resolution plan preparer. You can act as a valuer. You can act as a transaction auditor. You can act as a forensic auditor. So these are the opportunities which are available to all of you. And there can be some other opportunities also which are there. And to add to them, this is another opportunity where the small and for medium, small enterprises will be covered, micro, small, and medium enterprises will be covered under this pre-package scheme, and this will open up a new area for all of us. So as before the discussion or before this program got started, it was told by Anil ji that this is going to be very beneficial area for the chartered accountants at large, wherever their clients are facing any kind of distress, they are into the financial trouble. If they want to have the partner, it will be very difficult. But if these MSME corporate entities or MSME goes through this insolvency resolution process, which is termed as pre-packaged scheme, then I think lot many advantages will be there, and we will be able to bring out our client from the distress and stress to the normalcy, and they will start working again. They will start producing again. They will start serving again, and the job will be maintained, and they will boost economy again, and they will continue to serve the Indian economy. So this is how this is going to create opportunities for all of us. As far as at the institute level, Insolvency and Bankruptcy Committee is concerned, of which I am chairman, we are doing lot of programs, and beside dissemination of the knowledge through various virtual CPE meetings or webinars or webcasts or conferences, or we have planned international conference also this year. We have started a new initiative to update our all members through the various law updates. It is known as IBC case law update. Every month we are publishing where the Supreme Court judgment, High Court judgment, NCLT judgment, and NCLT judgments are covered. So every month the important decisions taken at these forums are being put into a capsule, and it is being sent to all of you. So you get an idea that what is happening and what kind of case have been decided so far. So this is one initiative we have taken. The another initiative we have taken is that we are coming out with the 8 small publication. To read a book of 400 page, which is IBC or so, it becomes difficult. But if you break it into 8 pieces, I think the small book can be read very easily. So we have planned around 8 publications of around 60 pages each, one on claim, one on resolution plan, one on CIRP, one on personal guarantor, one on moratorium, one for do's and don'ts, and one for prepay case. So these kind of publications we have planned, and I'm sure once these are done, of which around 3 we have already received draft. We are working on it, and it will be soon published. And the balance, all the groups have been created, and all the publications will be ready hopefully by the month of June, and we will be in a position to publish all these. So it will give the facility or will build the skill set of our members after reading those. Say, suppose I want to be perfect in the claims and want to be claim consultant, I want to be the resolution planner, then I must go and read that. This is the first page of the publication for the basic knowledge how it should one should go into it, and one should read and how it should be done. And then the second edition of this will be on the advanced stage, where all the case studies with respect to these items will be discussed. So you can have the in-depth knowledge of those particular things and can work on those areas and can create opportunities for yourself. So this is how we have taken initiative, and we are working hand in hand with the IBBI also, and we are making various representations to IBBI. I being the director of IIIPI also, we are the IBC and IIIP, which is an IP agency of IBA. We are giving the lot of suggestions wherever needed, and we see that the best for the professionals can be done who are our member. We will try to do those things always. And I request all of you, if you have some feedback on this, please feel free, write to me on my email ID, which is easily available. You can Google it down, or very simple, durgeshkabra@icai.in. You can send me a suggestion, and we'll try to take it forward, and we'll see that how we can build the skill set of our members, how we can do the best for the service to our fraternity and members. With this, I thank you, the chairman of the branch, the secretary of the branch, vice chairman, and the past chairman, and other participants who have attended this particular program. And it would be a great session by CA Anil Goel ji, who is expert and having the vast knowledge in the insolvency resolution process, has gone through the various resolution plans and CIRPs. So he will get today the best of the knowledge from the best of the faculty with respect to the prepackaged industry. Thank you once again. Thanks to one and all.
Thank you very much, sir. So it's an indeed pleasure to hear you, sir. And like what we can see here is that like the government has focus on MSME. We also feel that institute is also have a special focus on insolvency and bankruptcy court. They are coming out with various publication, which should be helpful to our members. And as well as what we can understand here that this process is going to be can be bifurcated into. Yes, sir.
Not only the government has focused on the MSME, let me tell you, institute is also focusing on the small and medium practitioners, and we are going to have the standardized audit tool, audit documentation tool, data analytics tool to build the capacity of our members. Around 50 crore rupees have been kept sidelined. We have already floated the RFP. Very soon you will have these kind of software, so you can build your capacity. You can use those data analytical tools and documentation tool that will build your capacity and will be not the second. We will be none to the second as far as the information technology is concerned in the world. We are first in the technical terms or technical knowledge, but in the technology also. Once we adopt all these audit tools or data analytics tools, I'm sure this will open up the opportunity also, and we will be in a position to serve across the globe, not only in India. So there is a focus at the ICAI level for the small and medium practitioners. I am the deputy convener of the audit tool group. We have already finalized, and hopefully it will be ready in another 3-4 months time. I think 1 or 2 should come to the members. Thank you.
So I totally agree with you, sir. There is no doubt that ICI is focusing. But what I was trying to say is that ICI have a special focus on insolvency also. They are coming out with publications, and as well as they are dividing the role of CA into various fields, like you have mentioned about it can be you can claim settlement expert or resolution expert. So there are a lot of enough opportunities which can be explored under this area. Thank you very much, sir, for your kind words. And moving on to our today's topic, I believe that this is going to be very interesting topic because we have already started getting questions for Anil Goel, sir, before he has started. So I believe it is going to be very exciting session today. So now I will request I request our past chairman CA Jayant Tandil ji to introduce our today's speaker of the day, CA Anil Goel ji. Sir, you have to unmute.
Hello, it is a great opportunity to introduce today's speakers who has a vast experience in insolvency and bankruptcy, C. Anil Goel, sir. C. Anil Goel is the founder and chairman of AAA Insolvency Professional LLP, one of the first 2 insolvency professional entity recognized by the Insolvency and Bankruptcy Board of India. He was a member of Advisory Committee of Insolvency and Professionals of ICAI till March 2020. Has been a co-chairman of ASSOCHAM National Councils of Insolvency and Bankruptcy till March 2021. He was a member of working group established by Insolvency Bankruptcy Board of India for implementation of individual bankruptcy in India. He was also a member of SEBI group as constituted by Insolvency and Bankruptcy Board of India for the interaction with SEBI, NSE and BSE for seeking the concessions for companies under the insolvency process. He was a faculty for awareness program launched at instance of CBDT and Insolvency and Bankruptcy Board of India for the tax authorities and deliberating on the tax authorities vis-a-vis IBC. He was a faculty for the speedy awareness among the DRT members and the officials on the insolvency and bankruptcy of personal guarantor. He is a regular faculty of ICAI for the first batch of graduate insolvency program by Insolvency Bankruptcy Board India. C. Anil Goel sir is a regular speaker at various forums and webinars on insolvency and bankruptcy law, valuation and management of trusted assets under SURFACE or otherwise through the restructuring of debt. He is a regular speaker of workshop organized by the Insolvency and Bankruptcy Board of India, IPAs of ICAI and ICSI and ICMA, and have given various talks at banks and financial institutions. Besides being the faculty and training workshop organized by Insolvency and Bankruptcy Board of India for IPs and professionals by IPS, SBA Academy, IICA for GIP, etc. He is a regular contributor of the articles and other content on the digital medium. C. Anil Goel sir is also the most experienced IP in the country, and he has concluded 15 assignments in his name and is presently acting as the liquidator in 10 companies. Some of the known names are REI Agro Limited, Rotomax Group of Companies, LMEL Limited, Amrapali Groups, Lanco Groups Companies, Nirav Modi Groups Companies, Visa Powers, Varsana Ispat, etc., either in his name or in the name of his partners. He is the founder of EEE Insolvency Professional LPP, the largest insolvency professional entity in the country in the terms of handling the more than 190 assignments as IRP, RP, liquidators collectively in the names of all the partners of EEE Insolvency Professionals LLP, which he is surprising and providing all the support services, including legal support, including 45 assignments of the liquidation process. Largest number of the designated partners, that is 32, and 12 associate partners, and still selected for some more partners at different locations. Largest numbers of human resources, that is 300 plus working full time for the insolvency and SURFACE practice. Maximum location covered as offices and partners are located at
I think
New
this
Delhi.
this is like the main issue today is the subject of PIRP. I would request the organizers to shorten this introduction process.
Javan, please shorten the.
We should start the PIRP
Okay.
session. People are waiting for this. My request is this.
Thank you, sir. It is great to see you. Everyone, please welcome C. Anil Goel, sir.
Thank you. Thank you very much. Thanks a lot. So my greetings to CA Durgesh Kabra ji, our own Central Council member. And my greetings to the chairman of NAVI Mumbai branch of WIRC of Institute of Chartered Accountants of India, CA Sanjay Bujwal ji, the office bearers of NAVI Mumbai branch, the past chairman, other council members, the participants who are there today for this session on pre-packaged insolvency process resolution. I agree with the CA Durgesh Madanji that the contribution of Institute of Chartered Accountants for this insolvency and bankruptcy code and development of this profession in the country has actually been very, very appreciable. He himself has done a lot of work for this profession, this new opportunity for the chartered accountants. He is the chairman. The efforts of the committee on insolvency and bankruptcy, and also he is a director on this IIIPI, the Insolvency Professional Agency of Institute of Chartered Accountants of India is also known. So my thanks and compliments to our Central Council member, and the main subject today that we are going to discuss is the pre-packaged insolvency process regulation. In short, we would call it as PIRP, and most of us would know that the existing resolution process, which is corporate insolvency resolution process, we call in short CIRP. So in today's conversation, the pre-packaged insolvency resolution process, we would refer it as PIRP. And whenever we are referring to the corporate debtor in today's conversation, that means the corporate debtor means MSME corporate debtor, because this particular law PIRP is only applicable to MSME corporate debtor. First of all, it has to be a company, private limited company, or an LLP, any incorporated entity. And second condition is that it should be an MSME. So when we discuss today, I would request all that they should ask questions. Every 30 minutes, we will have a question answer session. And one of the organizers would assist me in reading the questions, or even I would also be able to read myself. But every 30 minutes, we would be able to attend the questions on the subject that is already spoken about. The questions would be very, very important. So to make this session live, one question answered, the answer goes to almost 100 who are participating today in this webinar. The subject is very important. CA Durgesh Madan, CA Durgesh Kabraji has already said that this is an opportunity for chartered accountants. Most of the restructuring proposals, most of the one-time settlement proposals, all will go through this structure. Like as he rightly said, that in UK it is called pre-packaged, pre-agreed business sale. In India, we have hardly seen any MSME corporate debtor being sold. May that the business model is very strong, still the MSME corporate debtors are not being sold because of the huge the time that it takes in due diligence, understanding the liabilities, understanding the tax non-compliances, understanding the criminal non-compliances. But now, after this PIRP is introduced, there is no requirement of that kind of huge due diligence. The most important part is that Section 53 is applicable to this PIRP structure, and based on the assets of the MSME corporate debtor, whatever is payable to the creditors based on their priority under Section 53, all others left out would not be entitled to get any amount. May it be contingent and may it be real. So the person who is entering into the company as an investor, as partner, as director, as shareholder would be completely safe. He would not be having bombshells every day. He would be very comfortable in conducting the business, in driving the business as against the past. So I would share my PPT. Just give me 1 second. I'll just share my PPT.
Sir, any technical issue in sharing the PPT?
I hope the PPT is visible to all of you.
Yes.
So I think before we go ahead, I would like to say the basic features of this PIRP. Very quickly, I will say that this PIRP is applicable only to MSME segment of industry, and that to MSME corporate debtors. The second key feature in this PIRP is that unlike CIRP, the RP does not take over the company. So when I say does not take over the company, there are three things that the RP is not supposed to do in this structure. One, that he is not responsible for keeping the company as a going concern. The board of directors continues to handle the company, and they are responsible for keeping the company as a going concern. Number two, the RP is not responsible for preserving and protection of the assets of the corporate debtor, and the responsibility lies with the board of directors. Third is that uh, the business would be run, the control and custody of the assets and the business of the corporate debtor would continue to be with the board of directors, and the RP would not take over. See, when we see this CIRP process, the difficulty in MSME CIRPs was that only because see, the RP was one, that the RP was not given complete custody control, the information was not provided. There was most of the time there was a resistance from the promoters, directors, board of directors that this RP should not get more information, because then they were worried about the avoidance transactions, and also they were worried about the total resources may be used by the RP. So whenever we actually have gone through any MSME CIRP, we have seen that the most of the funds are completely vanished. The COC is also not contributing for the CIRP cost, and the entire process of CIRP goes into a kind of very, very stressful scenario. Then this PIRP is not coercive. It is a kind of mutual and consensual process where the creditors and the board of directors, they agree to a structure, they both agree, and then they file the application to NCLT. This structure is not possible for the operational creditors and the financial creditors to file an application before NCLT, because this has to be an application filed by the company with the permission of the financial creditors. The cost also in this case is much lesser than the CIRP cost, and this does not disrupt the business. This does not disrupt the business. The business continues, the board of director continues, all their agreements, all their production, employees, customer, everything continues, and there is no disruption. So even if the PIRP fails, the company doesn't go to liquidation. Whereas in the case of CIRP, in case the CIRP fails, the company goes into liquidation. So therefore, in this process, the value of the company does not diminish, rather it increases, because of the protection from various kind of liabilities. The value of the company increases. So this assures the continuity of the contribution to GDP, continuity of the employment, preserves jobs, and there is no liquidation. That's what is the basic structure. I think Mr. Kabra has already told that this particular law has been implemented on a lightning speed. I will just add that on 4th of April, the ordinance was promulgated, and on 9th of April, the IBBI notified regulations, and the Ministry of Corporate Affairs notified rules, and also a notification that the minimum default for PIRP would be rupees 10 lakhs. However, there is no limit on the maximum default. The law has been inserted in a manner, there is a chapter 3A has been inserted into IBC, and sections from 54A to 54P has been inserted, and also section 67A and 77A has been inserted. So in total, the law is seemingly it is very small, but actually it is completely going to be a new structure. Quickly, I will attend to the scenario. What are the existing what are the existing remedies available, what are the existing way available for any MSME under financial stress. One is the CIRP that I've been telling, that the CIRP has its own challenges. The other possibility is the compromise and arrangement scheme under section 230 of the Companies Act, which is also not finding favors because the 75% of the consent of each class of creditors is required for any kind of settlement. And everyone, whosoever has got about 10% of the total debt of the company, can come forward, can file an appeal, can file an application before NCLT, claiming that they are a separate class of creditor and they should be given a role of special separate class. So this also has actually been contributing to the lesser population, the popularity of this scheme. Then we also have this other, because these are the two arrangements which are kind of court supervised arrangement, because this NCLT supervises these two, both the arrangements. One is the CIRP and the other is the 230 under the Companies Act. Then we come to the RBI Prudential Framework for Resolution of Stressed Assets, which is based on the circular of RBI dated 7th of June 2019. Of course, that circular is presently live. All other circulars of RBI, like corporate debt restructuring and the SDR, CDR, S4A, all those structure has been abolished. Those circulars have been withdrawn, and those processes for restructuring revival is presently not available. This RBI Prudential Framework for Resolution of Stressed Asset is presently mandatory for any outstanding of more than 1,500 crore. For it is also voluntarily for any kind of MSME organization. However, this also doesn't have the powers of Section 53. This doesn't have any stamp of any legal court, and this is mutual and not. It is only binding on all those RBI regulated lenders. If there are any lenders which are not RBI regulated, those are not governed by this structure, this framework. Then what is most popular as of now, which is getting replaced with PIRP, is the normal restructuring proposal, where we apply to the banks for kind of deferment in the loan, or conversion of excess borrowings into WCTL, or conversion of unpaid interest into the funded interest term loan, reduction in the interest rate, like extending the further moratorium period. All these are the structuring options that we have, where we reach out to our lenders one by one. There is no structure, there is no compulsion, except that the banks are governed by their own internal circulars. Similarly, the one-time settlement is also something which is handled by the banks individually based on their own policies. Banks are not really focused on this. The employees of the banks are not taking decisions regarding restructuring and one-time settlement. So all this scenario, we can see the difficulties which has actually been faced by the MSME corporate debtors. The challenges are huge. So when we talk about this restructuring, I would say that that there is no formal formal structure or formal framework is available for the banks to do restructuring. Similarly, for one-time settlements also, there is no framework, there is no written policy, except barring a few banks. And it also depends upon the case to case. It also depends on the officer to officer sitting there. And this doesn't have any other relaxation, except that the bank in which the borrower is dealing with and asking for the one-time settlement. In most of the restructuring proposals, the promoter's contribution is asked, additional collateral security is asked, additional funding would be available or not. That also is something which is not really seen in the recent past, that the additional funding is also available in the restructured accounts. This committee approach is there in some of the banks, that the committee will take a decision regarding the restructuring or regarding the one-time settlement proposals. However, in this case, the entire structure is committee based, and that committee is not only internal to one bank, then this committee now in PIRP is the committee of all the creditors. There is no time limit, there is no obligation on the lenders to run the process. Section 53 is not applicable, and even the OTS is not preferred by many banks. Other than the valuation, there is no other process where the banks can call for the market value of the MSME running unit. They only have to depend upon the representations made by the board of directors. The time taken presently is very high, and by that time the account slips into deep NPA, and the bank in fact start taking the other recovery processes, maybe SURFACE or CIRP, and the bank is also liable to make more and more provisions. In this PIRP, there is an open competition. The promoters are competing with the market, and whosoever gives the best will take away the company. In the present structure, in a restructuring and OTS, there is no judicial approval. There is nothing like approval of the resolution plan. There is nothing like protection from the creditors after the resolution plan is approved. So in most of the cases that we have seen, if the borrower apply for one-time settlement or restructuring, the banks become a little more active and more proactive, and they start taking actions against SURFACE and against other things. So the basic differences between PIRP and CIRP I have been discussing, and the couple of other things that I would like to discuss is that in the PIRP, the board of directors will have the first right to submit a resolution plan. Being MSME, they have the first right to submit a resolution plan, and they would compete with the public. In case the public is giving a better resolution plan, then the promoters will have the option to improve their resolution plan other than this significantly better resolution plan concept that I will explain later. Otherwise, in most of the cases, the promoters will have the option to improve their resolution plan if the public is offering more than what they are offering. The application in PIRP cases is filed after taking in principle approval of the financial creditors. The CIRP process is little lengthier, and like PIRP is much faster, it is a quicker process. In PIRP, there is no process of interim resolution professional. It is directly a resolution professional. However, there is a provision that even the resolution professional can be changed by the committee of creditors in PIRP also. Once the PIRP application is submitted to NCLT, during that period, even nobody can submit application under section 7, 9 and 10. And even if it is submitted, the adjudicating authority would not take cognizance till the PIRP is over. If PIRP fails, the company doesn't go to liquidation, it continues the way it is continuing here. Whereas in the CIRP, if the CIRP fails, then the company goes into liquidation. In PIRP, there is no process of filing of the claims. Rather, the list of creditors is provided by the board of directors. And the resolution professional work on the list of creditors based on the books of accounts and contact each and every creditor for confirmation of their claims. The RP will not run the company, but RP will only supervise in case of PIRP. The COC will have powers to restrict the powers of board of directors. They can restrict the powers. And in case the board of directors continues to do some fraudulent transactions or mismanagement, then they can be imposed penalty under section 67A, or they can be prosecuted under section 77A, which are newly constituted, the newly inserted sections. As I've already said, that this eligibility of this PIRP is only one, that it should be an MSME, and two, it should be a registered MSME. Now, the registration, the threshold limits of the investment in plant and machinery and turnover, that has also been revised. I will just come on the second slide. First of all, this is MSME and also the registered MSME, although there are provisions that the applications can be made by all those MSME also who are not registered, and maybe that they are new or they have not done registration so far, but registration would be required, or otherwise they can also attach the documents where it shows that they are MSME. The default must be for about 10 lakhs of rupees, and this default doesn't require any NPA status. The default can be only with the operational creditors, can be the statutory liabilities, can be for even workman wages or salaries, but the default should be more than 10 lakhs of rupees, and it is not required that the company should be NPA before the company becomes eligible for PIRP. If PIRP is going on, then no second PIRP is filed. If the CIRP is going on, no PIRP can file. If the company is under liquidation, no PIRP can be filed. And if the company has already been declared as willful defaulter, then also the promoters would not be eligible to submit the resolution plan. So therefore, PIRP is not applicable in all those cases where the promoters are, where the company is considered as willful defaulter, or the prohibited by the SEBI from trading in securities. These are the eligibility criteria. The definition of MSME nowadays is like 50 crores of up to 50 crores of investment in plant and machinery and 250 crores of turnover. When we look at the definition of the plant and machinery now, it is very clear that the new provisions, which is applicable from 1st July 2020, the law considers only the return down value, as provided in the income tax returns. So the this registration portal, Udyam registration portal, will pick up the figure of the return on value of the plant and machinery from the income tax returns, or from the income tax records, and also the turnover will be taken from the GST records and the income tax records based on your PAN. However, in case we see the definition under Section 8 of the MSME Act, the pollution control, research and development, industrial safety devices, and all these are excluded from the definition of plant and machinery. However, the new definition, as per the income tax law, that includes all kinds of plant and machinery, equipment, electrical fitting, vehicles, cars, trucks, buses, ships, aeroplanes, softwares which are used for the business of the company, and also the books used by the professionals. So this is the definition, which is little enlarged, but it is WDV based. So that's a very big comfort. Even there is a notification in 2003 by Ministry of Industry that even the jigs, molds, dies, all would be excluded, and even the freight and also the interest during construction period or pre-operative expenses during installations, and that also would be excluded from the definition of plant and machinery. Registration is must. Present law is that everyone is supposed to get their registration updated by 1st of July 2021, and then it becomes a regular process. Everyone is supposed to update the information on the Udyam registration online portal, and this updation would be required. E-certificate is given, and the information has to be updated every year to the Udyam registration portal. When it comes to the timing, the time of this PIRP, the timing of the PIRP is, there is a 3 or 4 stages. One is a pre-PIRP stage. I would even say that a stage which is pre-PIRP or a stage A, when the company starts thinking about, when a CD starts thinking about the insolvency process, and that too under PIRP. So whenever a company thinks that the eligibility is there is a financial stress, they would like to go for the PIRP. The first thing is that they should start preparing a base resolution plan. Now, what is a base resolution plan? We normally, everyone has actually been somehow engaged in any kind of restructuring proposal or one-time settlement proposal. So whatever we as a corporate debtor needs from the banks, that has to come in the resolution plan, which is called base resolution plan. The base resolution plan will actually talk about the reasons of talk about the extent of default, extent of financial stress, the reasons for the financial stress, causes of losses, and then finally the remedies for the revival, for the removal of the financial stress, all these remedies. So this is what is called a base resolution plan, where the corporate debtor would prepare this base resolution plan based on the business model, based on the projections, based on the assets and liabilities, and would submit it to the financial creditors that this is my proposal. I would be able to handle my financial stress in this manner. You need to give me something additional as working capital, or you would need to give me permission to sell some of the extra assets, or you would allow me to add some partner or a shareholder, or you would allow me to almost sell my undertaking. That is the way I would like to resolve my financial stress, and that would be beneficial for the creditors, beneficial for the company, and beneficial for the customer, beneficial for the employees. That's what we actually have to represent before our financial creditors after preparing a base resolution plan. So this is a period which is not even counted in the entire framework of PIRP. So when I say that this is the period, so this is a planning that has to be done. So this is the first opportunity with the chartered accountants. So this is the first opportunity with the chartered accountant professionals, because they are engaged with the MSME corporate debtors. They would understand the company actually is gone into some kind of deep trouble or a little bit of trouble, which should be resolved. Otherwise, the company may go deep into the financial stress trouble. The chartered accountants would look into the causes of default, the kind of remedies available, the additional funds required by the company, and also the correct position of assets and liabilities of the corporate debtor. Based on all this information, based on the information of the business plan, projections, and the future profitability, the base resolution plan would be prepared, that this is the manner that the company will earn money, this is the manner the company will pay, but this is the only money which the company can pay. Company cannot pay more than this. The operational creditors, the government liabilities, they all have to support. Only then the PIRP would be successful. So my assets, the assets of this company is only 50 crores, whereas my liabilities are 100 crores. The bankers should be presented by this chartered accountant who is a consultant to the MSME corporate debtor, that look, in case you would not accept my in principle, you would not provide my in principle approval for the PIRP, then the account may slip into NPA. Number two, somebody else might even start CIRP, and the bank will be required to create provisions when the company goes into CIRP. Whereas in the case of PIRP, the banks are not supposed to create any provision unless there is restructuring which is approved by the Committee of Creditors and Adjudicating Authority. Now, so this is a period where this opportunity would be with the chartered accountants. So they would prepare a restructuring plan. They would prepare a way how the banks would be, how the financial creditors can be paid, and how much can be paid, and how much haircut is required from the operational creditors, how much haircut is required from the statutory liabilities. All that has to be given in the resolution plan, which is called base resolution plan. Now, once the base resolution plan is prepared and it is found that now we can start the pre-PIRP process. So the pre-PIRP process is for about 90 days. When this resolution plan is prepared, then the company will also hold a board meeting and will kind of discuss this, and majority of the directors will give a declaration about in the format which is already provided about the intent to start PIRP and also the eligibility. Then the company will also pass a resolution in the meeting of the members of the company, shareholders of the company. Then a list of creditors with their contact details with the complete documentation would also be prepared. So these are the 4 documents which would be prepared: the list of creditors, because the list of creditors would actually provide information to the financial creditors that who are the other financial creditors, so that they can even interact with each other to discuss this PIRP proposal. once all these documents are prepared, like base resolution plan, the declaration by the directors, the resolution from the members of the company, and the list of creditors, all this would be submitted to all the financial creditors of the company. Now the financial creditors have been submitted. The intent of the corporate debtor to go to PIRP, and then we come to the regulations. The regulation says that the corporate debtor will have the power to convene the meetings of the financial creditors. So the process is actually very clear. I am actually saying, first of all, you have to see the eligibility, whether your corporate debtor is eligible or not. Second, then you have to see whether there is a default or not, whether the financial stress is there or not. And then thereafter, you also have to see the other parameters on the eligibility. Once the eligibility is found, all the chartered accountants who are interacting with their own clients, they should guide the client that yes, this is a time that you should actually avail the benefits of PIRP, and this PIRP would actually provide some long-term resolution to the financial stress of your company. Then all these documents are submitted, and the meetings are officially called with 5 days notice to all the financial creditors. They would meet and they would discuss. What is the discussion in the meeting at that particular time? They would first of all see the eligibility. They would see all the rules and regulations have been complied, and then they will start discussing with the base resolution plan. They can even say that we first would like to see whether there is a fraudulent transaction in the company or not. We would like to appoint a forensic auditor. So in case you are comfortable, then we would appoint a forensic auditor. After the report of the forensic auditor, we would give you in principle approval. And also you need to improve this base resolution plan. Otherwise, we are not comfortable with this base resolution plan. We need to have something more, because we understand that you have whatever. This is a negotiation part. So the 90 days starts, pre-PIRP 90 days starts from the date of the declaration of majority of the directors. During this 90 days, the banks will meet maybe 2 times, maybe 10 times, depending upon the need to discuss. And then in case the banks feel comfortable that yes, they can in principle go for PIRP, then they will actually give their consent by way of a voting of 66% of the voting share based on the amount of debt outstanding for each financial creditor. Now this, what we have done so far, we've done the PIRP in principle approval by the banks, and in that process, the bank will also try to find out a resolution professional who they trust to run this process, and the resolution professional would be appointed by the financial creditors, and the application would be submitted to NCLT, and that application would have lot many documents, updated balance sheet, updated financial position, updated list of assets and creditors, updated list of creditors. All that will have to be submitted to NCLT. And since there is no resistance from the financial creditors, there is no resistance from the promoters, even there is no requirement of serving notice, the law of natural justice is also not required to be implemented here. So therefore, we assume that this application will be actually approved by the NCLT within 14 days as prescribed in the law. Because there is no resistance, there is no opposition to this, neither from the financial creditors or not. Hardly there is a possibility of any litigation at admission stage. So the application is admitted and the RP is appointed. So this is the one part. And during this period after the RP is appointed, until the NCLT decides, before even the application is filed, RP will also conduct the process of appointment of authorized representative, if required, looking into the list of creditors of the company. If there are classes of the creditors or there are class of creditors, for each class of creditor, the RP is supposed to appoint an authorized representative for participating into the meeting of committee of creditors. Pre-PIRP period of 90 days, assuming 30 days time that the NCLT will take, 120 days. And once the RP is appointed by the NCLT, again 120 days starts. And within that 120 days, the 30 days time is also given to the NCLT for approval of the resolution plan. So in total, the day our resolution plan is approved, the day our declaration of the majority of the director is given, the process will take about 240 days, including the time which will be taken by the NCLT. So until this particular moment, is there any question? Because that we can take up now, or you feel that we should deliberate more and then the questions will come? What is the opinion of the organizers?
Sir, we can do in both way. Like there are few
Yes,
questions
Vishal.
already posted.
You are mute. You are not audible.
Can you hear me now?
I don't know why. Just 1 second. I think it is the difficulties at my end only. I'll just correct.
So I can hear you, sir.
Yes, the difficulty was at my end only. Sorry.
Okay. Can you hear me, sir?
Yes, I'm here. I'm able to hear you now.
Okay. So a few questions are there already on which are posted by the members.
Yes, please.
Okay. So first question is for PIRP eligibility under 29A is required. In the PIRP, the CD himself is the RA most of the times. That means an MSME who is a standard asset alone can initiate PIRP. If it is so, that means for NPA MSME, there is no resolution under PIRP.
No, I think first of all, this section 29 is applicable to section 29A is applicable to PIRP also, number one. However, in section 29A, there are two clauses, which is clause C and H, which is not applicable to MSME. Therefore, the clause C and H, one belongs to the NPA status and the other belongs to the grantor status. So these two clauses are not applicable to MSME. So therefore, only clauses like the willful defaulter, the SEBI debarment from the SEBI, these are the only two clauses which are applicable to MSME. So in case these two are not there, in case the CD is not declared as willful defaulter or the CD is not debarred from the SEBI, there is no other clause which is applicable as far as section 29A is concerned. Therefore, the account may be NPA, the account may not be NPA. The PIRP depends upon the default amount of rupees 10 lakhs or more. And the default can be for a operational creditor, for even payment of salaries and wages, and for even payment of the statutory liabilities. So there is nothing prevents from and to any corporate debtor going to PIRP if it is not an NPA. The default can be with regard to any kind of debt. That is not restricted to financial creditors or banks or financial institutions.
So second question here is that don't you think that under PIRP, the promoter should be given a chance to match with SPRP by making revised offer in his BRP?
See, the concept I would explain. This is a subject that I would like to take it up later, because I have a specialized slide for the significantly better resolution plan.
We can take this discussion later.
Best resolution. I will actually explain the difference between the base resolution plan, significantly better resolution plan, and best resolution plan. That is something which is very important for all the participants to understand. Then only they would be able to guide their client that they should offer a resolution plan which is closer to the market value of the company. So that I will come back later, because this particular subject is not yet deliberated by me. So it will not be understandable by other participants. You can move on to next.
So company continues even after PIRP. So also the other creditors. What are their rights on final claim for non-financial creditors?
So after the PIRP, you see, I think the question wants to say that after the in case the PIRP fails, or if the PIRP is successful.
So that is not clear from the question here. So we can deliberate
No,
on
I
both
think we
the
can
scenarios.
deliberate on both. In case the resolution plan is approved, so whatever is mentioned in the resolution plan, that would be the status of all the creditors. If the resolution plan says that this will be offered to the financial creditor and this is being offered to operational creditor, so that would be the status of each claimant. In case the PIRP fails and no resolution plan is approved by the Committee of Creditors or by the NCLT, the company doesn't go into liquidation. Company keeps running under the supervision, under the control and custody of Board of Directors as it was running. No provisioning is required by the bank because there is no restructuring which is approved. However, for the next 3 years, the company is debarred from taking up another PIRP proposal. So there are two situations. One is the pre-PIRP. Now, today, if I start the process that I want to discuss with my bank, that my PIRP may be started. I start convincing my bank, and the bank takes more than 90 days. That a bank says that no, the scheme is not yet there. There is no circular from the bank, and we are waiting for internal policy. All this the banks will say. For this, by the way, I would like to say that this particular law is completely active. Even the applications can be submitted now. Even the RPs can be appointed now. So there is nothing which is pending from the government side as regards the implementation of this framework. It is completely live. Now, otherwise, in case the company is the PIRP is not successful, then the company keeps running, and then the promoters can also look forward other options. The creditors also can go for CIRP. The creditors can go for SURFACE, or the creditors can go for other kind of even OTS or restructuring as per their internal policy. So everything else is possible even after the PIRP fails. But if the PIRP is successful, then whatever is written in this resolution plan, that is to be implemented.
The next question is, can a company under CIRP apply for registering as MSME? If yes, then who should apply, RP or suspended directors, to make the application of MSME?
Now, see, for making an application for the registration of MSME, some decision is required from the Board of Directors. And if the Board of Directors are not in power, then the RP can apply for the registrations of a company under MSME. Whereas the directors cannot apply. If a resolution is required to be submitted, then no resolution can be passed. However, the RP can apply. Wherever a resolution is required, I mean, even otherwise also, like in case I say that the general manager of the company will sign, of course, the directors cannot sign. The general manager of the company also can sign in case the RP has authorized him, because all earlier powers given by the Board of Directors to CEO, to CFO, to general manager, all those would actually be considered as lapsed once the board gets suspended. So the new powers will have to be given by the RP. So the application can only be signed by the RP or any person authorized by the RP.
Okay. Sir, how much provisioning is required when PIRP is initiated?
So far there is no RBI direction. What we understand is that the PIRP is almost akin to a normal restructuring of the loan by the banks. However, the restructuring would be concluded and would be only done when this resolution plan would be approved by the adjudicating authority. So if the resolution plan is approved by the adjudicating authority, the provisioning would be required and the account would be considered as a restructured account. And as per the RBI norms, for the restructured account, the provisioning norms would have to be complied with. Secondly, in case the PIRP is not successful and the PIRP terminates without any resolution plan being approved, no provisioning is required because no restructuring is done. Thereafter, the lenders may take another course for recovery of their dues. Since they have known the company's status, they might think that there is some requirement. So the PIRP is considered to be restructuring. It is not considered to be an insolvency. It is only it's only something that which is the restructuring is being done through this insolvency process, because the section 53 applicability is very important for freezing the liability of any company for any restructuring proposal, for any merger, acquisition, partnership, shareholders, investment. All these transactions for any MSME corporate debtor will actually route through the PIRP framework in future.
Okay. So next question here is, if company has defaulted in payment to operational creditor of rupees 15 lakh, but somehow he arranges and pays 6 lakh by borrowing from others, So while filing application with AA, default amount is 9 lakh. Is company eligible?
Now, the default amount has to be more than 10 lakhs of rupees. It cannot be 9 lakhs of rupees. The default amount and the default, everyone understands that it has to be based on the documents. If I have purchased goods from any supplier, and as per the purchase order, I was supposed to give payment on 60th day. On 61st day, it will be considered as default, and I would be eligible to file an application for PIRP if the financial creditors agree. 9 lakhs is not the eligible amount. It is 10 lakhs.
So how the financial stress is defined?
Now, financial stress is defined only by default. If the company is defaulting, then there is a financial stress.
Okay. So 90 day for preparation of plan is plus 30 days plus 90 days plus 30 days. Which is 0 day for 120 days limit? Is there any extension allowed for 120 days timeline?
First of all, there is no extension allowed under the law. There is no possibility of any kind of extension. However, the exclusion, which was a creation of natural justice, in case the players are not able to play the match, that period would be excluded in case it is justified, in case the court is satisfied. As far as this exclusion is concerned, for the period the players were not able to play, that of course is available, whereas extension, there is no provision. The COC has no power to extend, the RP has no power to extend the period. Secondly, the first of all, this 120 days start from the date of the order of the NCLT declaring the commencement of PIRP and appointment of RP. So that is the day starting 120 days, and within this 120 days, 30 days has also been provided to NCLT for passing the order for approval of the resolution plan. The 90 days, we have to complete everything within 90 days. In fact, we are supposed to complete many things. I will come on the subsequent slides. This is a stressful scenario for any insolvency professional. It will be huge work.
And what if AA is taking more than 30 days for approving the plan?
Doesn't matter. I think the AA can take more time, and that particular period, the RP, who actually has been appointed by the committee of creditors, financial creditors, not the committee of creditors. The RP has been appointed by the financial creditors, but the RP would not have any role of monitoring of the corporate debtor. RP simply has done the pre-PIRP job where he has to submit a report. He has to appoint authorized representatives. However, in this particular period, the RP has to do many other things. All the back-end work the RP should continue to do. Otherwise, when I will come to the timelines under which the RP is supposed to complete the work when the PIRP is started, that timeline is very, very ambitious, and to my understanding, it may not be possible for all companies. So therefore, the RP would work after his appointment, because the RP is getting fee for this pre-PIRP period also. I will come to the fees in the next slides.
Okay. I think this last question is repetitive. Does NPA at any time affect eligibility of MSME for PIRP?
No, NPA is like if there is account is NPA, it's fair enough. The NPA doesn't. NPA is an eligibility rather it's not an ineligibility.
Okay.
NPA
and last one more question. So, does operational creditor have voting power?
No, operational creditor doesn't have any voting power. The operational creditor would not be a member of the committee of creditors, and even the provisions where the operational creditors were required to serve notice of the meeting in case their total debt is more than 10% of the total debt, that provision is also missing in this PIRP framework.
So yeah, these were the questions. As of now, we can continue with the presentation. And next set of questions we can take at the end, sir. How do you suggest?
I think that's okay. That's okay, because see, it's like we may have to finish it within the time. Okay, so I think I have already deliberated on how to start with, like the preparation of base resolution plan, declaration by directors, special resolution, other documents, and then holding of the meetings, official meetings with the financial creditors. And then the base resolution plan also, we have discussed what would be the base resolution plan. The base resolution plan should also have the list of creditors in a format which is there. See, one important part which should be understandable, there has to be a declaration. There has to be a declaration in the base resolution plan regarding the avoidable transactions under section 43, 45, 49, 50 or 66. Therefore, what I understand is that some banks are coming up with the policy that if anyone will approach them for PIRP, they would first get the account audited with regard to the avoidance transactions. So once that policy comes, then every corporate debtor would first be exposed to the uh, forensic audit. Then the bank and the financial institutions would probably give the in principle approval for the PIRP. The resolution plan should also talk about the feasibility and viability, and it also should show the projections for the entire period in which the debt would be repaid. The detail of the corporate debtor, the history of the corporate debtor, the any pending applications under section 7, 9 or 10, and the complete details on the basis and the MSME status details, default details, evidences of section 79A, analysis of the financial statements, projections, declarations, special resolutions. All this is part of the base resolution plans and all the documents which are required. The documents which are required also includes a kind of preliminary information memorandum, constitutional documents of the company, and contingent liabilities, the business operations in the last 2 years, updated books of accounts. In fact, for making any application under PIRP, the information which is required to be submitted before adjudicating authority should not be older than 14 days from the date of submission of the applications. That means everything has to be done quickly. If I am preparing an application, I should be ready with the financial statements up to a date which is not older than 14 days from the date of filing of the application to adjudicating authority. This preliminary information memorandum, which earlier it's supposed to be prepared by the RP, this preliminary information memorandum would also be prepared by the corporate debtor, and this will be verified. This will be verified by the RP. Now, the scenario that I'm trying to discuss with this preliminary, see, the scenario is that first of all, any company which doesn't have updated financial information, doesn't have the complete details of the creditors, complete details of the assets and liabilities, then the application would not be admitted. So the updated information about everything has to be there before any application is admitted. So this is the first requirement for any PIRP case. Then the application is submitted and the financial creditors start meeting. Now, if the financial creditors started meeting, and in the meeting they would only negotiate with the corporate debtor regarding the base resolution plan, and they will also understand the eligibility of the corporate debtor. They would also verify the MSME status. They would also verify the 29A eligibility. And in all these cases, finally, after the negotiation, the financial creditors will provide their in principle consent, and there is a form which is already there in form P4. They would provide the in principle approval, and that approval is only for the submission or filing of the application before adjudicating authority. So while the banks are giving in principle approval, that doesn't mean that the banks have accepted. Banks will further consider the base resolution plan, will try to develop competition with the resolution plans from the market, and would negotiate further, and then only they would approve a resolution plan. And since the banks are not incurring any expenditure, so the banks would be keen to handle any PIRP. They would not be under pressure to run the company. They would not be under pressure to make the payment of salaries and wages of the company. They would also not be under the kind of pressure of making the payment of the RP's fees or IPE's fees. So this way, I'm trying to say that this the opportunity for the chartered accountants is at this stage when they are supposed to convince the corporate debtor that this PIRP framework is best for your financial stress. They would negotiate with the banks. They would participate. The chartered accountant will participate in the meetings of the financial creditors. He would try to explain the bankers what exactly is PIRP, what are their rights and what are their obligations. And that is a job of a consultant, any chartered accountant who may or he may not be he may not be an insolvency professional. Then the bank will appoint an insolvency professional as RP on the for handling the PIRP. So the application is filed and the RP is appointed, because as I said, the application would be quickly handled by the adjudicating authority, because there would not be any kind of resistance. The notices also would not be required to be served, because the corporate debtor is filing and there is a consent available from the creditors. So the adjudicating authority would accept it. The adjudicating authority would accept the application and would pass the order. Then the RP would be appointed as the RP for PIRP structure. So the duties of the in this particular scenario, there is a duty which is casted on the RP even before the application is submitted to NCLT for PIRP order. RP is supposed to prepare a report regarding the eligibility of the corporate debtor, the process being followed or not, the documents which are required to be submitted, base resolution plan conforms to section 54K or not. Such report has to be submitted to IBBI also, along with the other documents. And there are some other duties which are supposed to be performed by the RP, like appointment of authorized representative, and then he will sign the application, he will sign the consent, and the application is submitted. For this pre-PIRP period also, the RP will get the fee. So RP will get the fee in various matters. So this scenario, I would like to explain that the RP will get the fee whenever the RP has to quote fee. First of all, the chartered accountant who is associated with the company, he will decide about his own fees for preparation of resolution plan, for doing other documentation, for representing before the creditors, for attending the meetings of the creditors. All that would be done by a consultant, and who would be charging his fee. However, the bank may not appoint the same consultant as insolvency professional. The banks will appoint an insolvency professional according to their own trust, and trust on the capability, and also the trust on the kind of ethical practices of the insolvency professional. However, before the RP is appointed, the COC would ask the corporate debtor that this is the fees that we have settled, and you deposit this much of amount in an escrow account, and that escrow account would be operated by RP, and RP will not ask for his fee either from COC or from corporate debtor. As approved by the committee of creditor, he will be able to make checks from that account. He will make the payment of valuers, forensic auditors, advertisements, and other staff, and whatever expenditure that he is supposed to incur, all that expenditure he will be able to issue checks from that particular account where the CD have deposited the estimated amount. And in case the estimated amount falls short, then the COC will further direct the CD to deposit more amount in that account, so that the RP is not supposed to ask for his fee from COC or from the corporate debtor. Three kinds of fees that the RP has to quote. One, pre-PIRP, where the RP is supposed to prepare a report, appoint authorized representative, he has to verify various documents, he has to verify even the base resolution plan, whether it is compliant or not. That's what is the RP's role before the PIRP starts, and the RP can even quote for a fee for that period. Second is that when he is appointed as RP, the total period is 120 days, so he can even ask for the fee, which is per month fee, because the NCLT may take a little longer time in approval of the resolution plan, or there may be some litigation. So the RP should quote a fee for the second stage, which is after the PIRP order is passed by the adjudicating authority, and he should ask for a monthly fee, and depending upon the size of the company and the complications involved. Third is like in case the COC decides that the management of the company be taken over by the RP, that should be a different fee, because then in that case the RP is supposed to spend more time in taking care of the company, keeping the company as a going concern, protecting and preservation of the assets of the company, and also taking the control and custody of the assets. So there has to be three types of the fees that has to be quoted by the RP, and the COC will approve it, and the payment will be made by the corporate debtor. Of course, the RP has to disclose its fees to IBBI also, and like this is, as I've already said, that this application cannot be submitted by any operational creditor or financial creditor. Once the PIRP fails, there is no possibility of any further application for the next 3 years. Some of the definitions is not required to be the cost. Now this, the application filing has also been cleared. The fee that the government has kept is 15,000 rupees is the fee for filing the application. Form 1 has been prescribed in the rules, which has already been notified on 9th April. Then all the application is submitted along with the documentation that I've already said, the declaration, the special resolution, and the approval of the 66%, written consent of the RP, report of the RP in Form P, declaration by the applicant regarding the existence of transactions. Those may be within the scope of section 43, 45, 49, 50, and 66. All these documents are supposed to be submitted, and the details regarding the books of accounts and other financial information not older than 14 days, or all these documents are supposed to be attached with the application, and the application is now submitted to NCLT. This is the phase B, where we are saying that the application is admitted by the NCLT, and before admission, the NCLT is only supposed to see the deficiency. If there is any deficiency in the application, 7 days would be given, and then the NCLT will pass this order. The RP will make public announcement also, and now this 120 days starts. After the NCLT order, 120 days starts. So 120 days is within 120 days, 90 days is for the RP, and the 30 days is for the NCLT to pass the order for approval of the resolution plan. I have very detailed analysis of the timelines. So here is when this my 0 starts in this first column, where A plus 2, public announcement in 2 days, submission of the list of claims by the CD to the RP within 2 days, also including this, the preliminary information memorandum, the list of creditors, the security interest, grantees, submission of waste resolution plan. All this has to be submitted within 2 days of the start of the PIRP. RP has to confirm all the list of creditors from the books of accounts and other records, and RP has to inform every creditor in an individual communication on the communication address provided by the CD that this is the amount of liability that I have received from the company, please confirm. So everything within 2 days. RP to provide list of creditors in each class to the authorized representative. Valuers has to be appointed within 3 days from the date of the appointment of RP. Everything has been done. Like this is within 3 days. Within 7 days, the committee has to be constituted, and the creditors, since the creditors got the information within 2 days, so they have 7 days time to give any objections to RP, and then the RP will finalize the final list before the meeting of the creditors. The first meeting of the creditors will take place in 14 days, and the RP is supposed to provide the latest information of the claims based on the representations made by all the claimants, and so far it is only 14 days. And in case there is any change in the committee of creditors, that of course would be done based on the confirmation of the claims by the RP. Now in case the invitation has to be, in case in the very first meeting, the COC will decide whether they are accepting the base resolution plan or not. In case there is no haircut offered to operational creditors, or there is no haircut offered to government liabilities, then the creditors can accept the base resolution plan, and they may not ask for inviting resolution plans from public at large. But in case the COC has to decide this within the very first meeting, so that within 21 days, the RP will issue publication for invitation of the resolution plan, and that particular document is called IFRP, and the only 15 days is given for all the RAs to give resolution plan. So now in the meantime, the RP is also supposed to do this form an opinion about the transactions within 30 days, determinations of the transactions within 45 days, making an application to adjudicating authority within 60 days, and finally the preparation of evaluation metrics, preparation of tick size, preparation of the invitation for resolution plan, IFRP. Instead of RFRP, it is called IFRP, and that all has to be done, and within 90 days the resolution plan has to be approved and then submitted to the adjudicating authority. The timeline is very tight. So the moratorium is available except for the essential services. All other moratoriums are available for the kind of all other moratoriums available for the CD. The duties of the RP that we have already discussed, powers are the same as we have in the CIRP. Public announcement is the same except for the newspaper. The committee will decide where the public announcement has to be given. Claim, as I said, that the no claims are supposed to be invited. Based on the books of account, based on the list of the creditors provided by the CD, the claims would be confirmed by the RP. And the process of the claim confirmation is almost like the claimants can come forward to submit their additional documents, and all that is the claims. The provisions of committee of creditors are the same. Section 28 provisions are applicable. So so here is one thing, that when the committee of creditors is constituted, then the committee of creditor has the responsibility of monitoring and supervising the operations of the corporate debtor. They can even restrict the powers of the board of directors. In my understanding, the committee will always say that the board of directors will not take decision on the following transactions, maybe for purchase of fixed assets, sale of fixed assets, repayment of any loan, taking any further loan. So all these things would be restricted by the committee of creditors in the very first meeting. So that is called a restriction on the, and then the committee of creditors will say that for all these things, the committee will come to the CD will come to the committee of creditors for specific approval. Authorized representative would be appointed, and they would be representing the COC in case there is a class of creditors within the list of creditors. The resolution plans will be invited from the public at large. The COC will decide how this advertisement has to be done. It can be based on the website of the CD, IVBI website, and the IFRP has to be very detailed, so that the link has to be provided in the form P12. Resolution plan shall be submitted within 15 days, and there is no process of provisional list of PRAs and then objections by the PRAs and then final list of PRAs. That process is not there. In this IFRP, there will be the parameters for significantly better resolution plan. So these are the invitations, and I would actually now go to that scenario where I would be discussing the base resolution plan, and then significantly better resolution plan, and the best resolution plan. Okay, let me completely concentrate. You see, this is something which is very important. This is a new process. As I said, the base resolution plan will be submitted by the corporate debtor. So whenever I say corporate debtor, that means board of directors or KMPs. The base resolution plan first would be negotiated during the pre-PIRP process by the creditors. There are again these similar kind of provisions as we have in CIRP, mandatory contents, the minimum amount payable to operational creditors, the otherwise, I'll just take 1 second because my battery is just off. Just 1 second. So this uh, base resolution plan would be submitted to RP within 2 days, and and then during these meetings with the committee of creditors, the committee of creditors will discuss with the corporate debtor that you should submit a base resolution plan which is better than this, and and since they also have got the valuations done, the valuation also would be quicker process in this case, because the most of the information which is required by the valuers, that also would be collected by the RP even before the PIRP starts. Now, in this particular process, the base resolution plan has been negotiated, and also the situation was, while these regulations were being framed, the discussion was in such the discussion was what happens that in case there is no threat to the board of directors, then they will start offer at rupees 1 for a value of rupees 10. If the corporate debtor has got a value of rupees 10, they will start with 1, and they will see what offer is coming from the market, and accordingly they will improve their offer based on the offers coming from the market, because they know one thing, that they have the first right of they have the right to improve their base resolution plan. So therefore, it was decided by the regulators that there should be a process of there should be a process which is deterrent to the promoters, so that they should not offer very less. So therefore, the process of significantly better resolution plan was introduced. The entire process of examination of resolution plan is based on evaluation matrix. Evaluation matrix will also be approved by the committee of creditors, and that also will depend upon the preferences of committee of creditors. For evaluation matrix will be based on the scoring system. The base resolution plan will also be examined based on the evaluation matrix, and some score would be ascertained, like what is the score of base resolution plan. And then the financial creditors will tell the board of directors that in case we receive any resolution plan from the public which is, say, 50% better than your resolution plan, means that, like, 50% better means that in case the resolution plan which is coming from the public at large, in case the score which actually that resolution plan will get is 150% of your score, then we will not give you any opportunity to improve your resolution plan. Then we will not give any opportunity to improve your resolution plan, and we will give your company to that particular resolution applicant who has submitted the significantly better resolution plan. So this is the concept of significantly better resolution plan, and all this is based on the evaluation matrix score system. Now the third scenario is, which is the best resolution plan, and this best resolution plan word is not used in the regulations or in the code, it is just out of my experience. So when I say that the public was invited for submission of resolution plans, and the public submitted, say, 3 or 4 resolution plans, and the COC negotiated with all the resolution plans and finally put them on a matrix which is the same matrix, and whichever is the best resolution plan based on the matrix, whichever resolution plan scores the maximum, that resolution plan will be considered best resolution plan. So all other resolution plans will be rejected, will be out of the process, and the best resolution plan would compete with the base resolution plan. Best resolution plan will compete with the base resolution plan on the same kind of matrix, and that is what is called Swiss challenge. Although the word Swiss challenge is not used in the regulations or in the code, but it will be based on technology. If not technology, then it will be based on Excel. So the time period would be about 48 hours. Within the 48 hours, both the best resolution plan RA and the base resolution plan, they would have the opportunities to improve, and they would continuously improve till the time the other party says that I'm not interested in improving further. Then whichever resolution plan is the finally achieves the best, may it be belonging to the promoters or may it be belonging to the public at large, that resolution plan will be submitted to adjudicating authority for approval. I hope this is understandable to a great extent. I would now touch upon one point where the COC considers during PIRP that the promoters are still conducting the business in fraudulent manner and there is a gross mismanagement, then the COC can actually decide that the RP should take over the business and they pass a resolution with 66% voting applied to adjudicating authority, and the adjudicating authority, this is the first litigation which is expected. The COC will say that the promoters are not managing the show. The promoters will say that we are managing the show correctly. And then the COC, this is a situation where the company can be taken over by the RP. Now, once the company is taken over by the RP under this fraudulent, under this section 54J, which is based on the fraudulent transactions and gross mismanagement by the CD, then thereafter, if no resolution plan is approved, then the company will go to liquidation. Because the company has already been taken over by RP from the promoters, a resolution plan has not been approved, and then the company will go to the liquidation. So this is one scenario which has to be considered. It is riskier. So board of directors must think that they have to go clean. They have to go with a clean slate. They have to disclose everything. Whatever is the value of the assets and liabilities, they should not hide. They cannot hide. This is the one that section 67A is also inserted, which says on or after PIRP, where any officer of the CD manages the affairs with the intent to defraud creditors of the CD or any other fraudulent purposes, then the RP shall file application to adjudicating authority for imposing penalty. So 67A is for only for penalty for fraudulent and the mismanagement. Then of course the COC would approve the resolution plan, and the approved resolution plan will be submitted to NCLT for approval. The similar provisions of protection of the operational creditor, like in case any liquidation value is due to operational creditors, they would be entitled to that in priority to any amount paid to the financial creditors. And in the case of dissenting creditors also, the dissenting creditors will get the liquidation value due to them in priority to any other financial creditor. So this we have discussed the significantly better resolution plan and the base resolution plan. The resolution plan is almost the similar resolution plan, whatever we have in CIRP. The COC has the same powers. The adjudicating authority has the same powers. So there is no change in the resolution plan. So all the provisions of the resolution plan are same: mandatory contents, term of the plan, management and control, the monitoring agency, adequate means to supervise, operational creditor to get in priority, dissenting creditor to get in priority. All those provisions which are there in regulation 37 and 38 of CIRP, all those are available in PIRP also. So there is no difference in this process of in the resolution plan. Approval of the resolution plan by the committee, by the COC, and then by the so in one scenario, if no resolution plan is approved by the COC, then the PIRP gets terminated, and the company is run. It is being run by the board of directors. It will continuously being run by the board of directors. So there will not be any change. So this is the process that we have already discussed regarding the approval of the resolution plans. Now the NCLT will approve or reject the resolution plan, and that is all the same conditions as we have already seen in various scenarios, vesting of the management, that order also we have seen. In case somebody is aggrieved, the application can be submitted to NCLT. For the appeal can be filed before NCLAT. That provisions are also there. At any point of time, the COC can also decide about the termination of the PIRP, and once the termination is done, then the next 3 years the PIRP cannot be started. This is terminated. See, there is a provision also that the PIRP can also be converted into CIRP if the COC decides that the PIRP should be converted into CIRP, and with 66% voting power, then the corporate debtor must be eligible for CIRP regarding that amount of default and 1 crore of claim. That should be the first criteria. Then the RP has to intimate the decision of the COC to adjudicating authority so that the PIRP is converted into CIRP. RP would be appointed as RP in that CIRP also, and but he would be appointed as IRP. And whatever the cost which remains unpaid to the RP, that would be considered as the CIRP cost in the CIRP process. So I think the most of this is covered. Section 77A has also been inserted, which is for imprisonment between 3 to 5 years in case the information in the application is not correct. It is false in material particulars. If the information about the claims and preliminary information memorandum is not correct, directors deliberately contravenes any provisions, then for all these things, section 77A is there. There is a provision for valuation of assets. 2 valuers are supposed to be appointed, and all these forms are provided in the law. So now I think the rest of the part we will take up in the question answer session. I can actually see whether there are questions. So I will refer to my slides whenever the questions are specific to any of my. So I think there are questions now, and since we already have concluded as far as the time is also concerned, but I can actually take up the questions for anything like half an hour, because I believe that a lot of people are having questions which I would be able to attend.
Okay, so should we take questions one by one?
Yes, we can.
Okay. So first question is there any time limit to implement the approved resolution plan, PRIP? What if the plan not implement within that time, or say reasonable time? What will be the role of RP till implementation of plan?
So one is the supervision of the implementation of the resolution plan. Although there is no provision in the law, but as per the practice in the market, the monitoring committee normally would have the resolution professional also as a member or as a chairman. So if the term of the resolution plan is say 2 years or 3 years or 6 months, then the monitoring committee or monitoring agency will be constituted as per the resolution plan and also as per the adjudicating authority order, and that committee will have all the powers to implement the resolution plan. In case the resolution plan is not implemented or there is a default, then any aggrieved party can file an application to adjudicating authority and the company can be liquidated. The consequences of not implementing a resolution plan is the same as we have in CIRP. There is no change in the consequences for not implementing a resolution plan.
The next question is, can there be a parallel adjudication of application of PAIRP and CIRP as OC can file application? Any preference allowed by law?
Yes, I think there is a cutoff period. The cutoff period is 4th of April 2021. If as on 4th of April 2021, if there is any application pending before AA under section 7, 9 or 10, and later on any PIRP application is filed, then the AA will first dispose of the applications under section 7, 9 and 10, and then they will take up the PIRP applications. And the second scenario is the post 4th of April 21. post 4th of April 21, in case any application is filed as PIRP, then thereafter, any application which is filed under section 7, 9 or 10, that will not be taken up by the adjudicating authority before the adjudicating authority dispose of the PIRP application. Third scenario, application is filed under section 7, 9 or 10 after 4th of April, and within 14 days of filing of those applications, the PIRP application is filed. Then PIRP application will take the priority and all other applications will be kept in abeyance. However, if no application is filed within 14 days, then all those applications under section 7, 9 and 10 will have to be disposed of before any PIRP application is taken up. Very clear provisions are there. So there is no doubt about this. There are complete clear directions to adjudicating authority.
Sir, unmute yourself.
Sir, there are no further questions as of now from the members.
So I think I can only say that there are people ask me the apprehensions. What are the kind of apprehensions? The people say that why the lenders will accept you. Why lenders will accept the PIRP? So I actually have given some of the answers so that I've listed all those answers that I've given in the past, because I think I've conducted too many webinars for the PIRP. So if the financial stress is not resolved through PIRP, then somebody can file CIRP and the company may go into liquidation, or somebody can take action under SURFACE, and that actually would lead to more provisioning requirement. In PIRP, the banks are not supposed to make any provisions, and therefore there is no harm to the banks in taking up the restructuring process. If nothing will be approved, the banks will get updated information about the company, and they would actually start their own risk protection measures. Since this is a mutual judicial process and consensual process, it's a mutual process, the banks are not taking any responsibility on any individual's head. Why they would do any restructuring or one-time settlement when there is a framework available, and that too with the judicial approval? Complete information is required. There is no possibility that the information would not be given by the promoters. The valuation of the assets would be very, very clear and authentic because of the independence of the valuers in this process. The CD will cooperate, and if they're not cooperating in the forensic audit, the financial creditors can always say that, yes, okay, we are not interested in your proposal in case you are not interested in getting the forensic audit done, which in other cases is never happening. Since the COC is not bearing any cost, they would be comfortable in handling any PIRP rather than CIRP. The financial creditors has all the powers to negotiate for the base resolution plan, and also they can have this significantly better resolution plan structure, so that the promoter should not take away the company for a song. They should pay the significant amount and as close to the market value. The valuers also will give comfort, and the invitation to public at large would also be something which is comforting factor. So there is no apprehensions to the lender regarding the supervision of the operations of the company, a responsibility about the payment of wages and salaries. The RP can also design some of the monthly information systems so that the COC gets the complete directions. COC can limit their powers, and in case they still find it difficult, they can still invoke 67A and 77A. So these are some of the answers that we've already given, and practically we can even speak much more about it if time permits. So I think we can conclude our session today with this, if there is no question. But I would have to just, in closing remarks, I have to say that there is no better structure than this framework of PIRP for restructuring of any MSME debts, for seeking more moratorium, for one-time settlement, for inducting any partner, for taking some investment from any person and he would like to become shareholders and directors. All these transactions now would actually go through the PIRP framework, because this will also give the comfort of limiting the liabilities, which is beyond your assets. If my assets are valued at 50 crores and my liabilities are 100 crore, based on 53 crore, I would get at least waiver of 50 crores, because that is something, but I would get waiver of up to 50 crores unless I voluntarily pay something to others. So that structure of waiver of 50 crores, I have seen people have started inquiring me that there is a raid of the income tax department on me. There is a raid of the GST department on me. There is a raid earlier demands which are ongoing. I have no other option except to leave my business or shift my business to some other company. But however, in this case, may it be whatever kind of difficulty on the company, this company will continue. There is no need of having starting a new company, disturbing the customers, disturbing the production possible. So that's something. But one important information is that the MSME status is only given to company which is engaged in manufacturing, processing, or in providing any services. If a company is purely a trading company, MSME status is not given. So I think I conclude this part of the session with this concluding remarks that the most benefit would be achieved by the practicing chartered accountants. The fee of the practicing chartered accountant who would act as a consultant will continue with the company would be much more than the fee of the RP in this case.
That is an
Because
attractive feature.
yeah.
So with this, I would like to request our Vice Chairman, C. Abhishek Shah, to give vote of thanks.
Yeah, thank you, Arshal sir. First of all, Anil sir, a big thank you because you covered all the practical aspects as well as you covered what you are doing in your day-to-day routine, and you have taken various examples and section-wise you have covered all the this topics. So it's really helpful for all of us and for our members. So on behalf of Navi Mumbai branch, I give you a big thank you. I can say you have given your around 2 hours, and we know to present. You require at least 1 or 2 days to make any presentation in any forum. So big thank you on behalf of our Navi Mumbai branch of WIRC. Also, I thanks to C. Sanjay Visual sir, our chairman, for conducting such good webinar, and our past chairman sir Suresh Ameria sir is also there, Ajendra Phadke sir, and entire members of Navi Mumbai branch of WIRC. So thank you everyone for joining us.
Thank you, Anil ji, for sparing